This program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
All right, I know we covered it on the call because one of our viewers wanted the stock covered yesterday. Henry Jennings from Marcus Today and Andrew Weiland from DP Wealth Advisory were pretty scathing about the SAX. Well, this morning,
SAX.
Did I say SAX? I got on my mind. It's certainly not sexy, that's for sure, or sexy. The ASX, its shares fell this morning. We've got to cover it again. As the market operator indicated an increase in technology spending, its Achilles heel for so many years over FY 2025 between 160 and 180 million dollars. Look at that, down 8.5% as we speak. The ASX announced increased spending was expected in the medium term before starting to ease after FY 2027. This elevated spending is said to be driven by ongoing technology investment, including software licensing, equipment cost, depreciation and amortisation. Regarding growth rate guidance for FY 25, set to be between 6 and 9%. And as we saw, shares slumping this morning. Daniel, this technology issue with the ASX has just not gone away, has it? It has been a right royal stuffer.
No, spot on, Koshi, and I guess that's the reason why ugly stocks can always continue to get uglier. And I was actually looking at the valuation post the fall today. It's still trading on 16 times enterprise value to EBITDA, which is, a pretty lofty multiple for the business. It's actually around its long-term averages anyway. So it goes to show that any fall in valuation has been more than offset by any fall in forward earnings. So we actually haven't even seen much of a valuation decline at the moment. It's primarily been an earnings-driven decline. So, and obviously a business like ASX with very moderate top-line growth, when you have cost increases at such a large amount, and ASX are big culprits of creative accounting. I mean, they tell you not to look at certain expense lines. They say they're one-off. They happen every year, like you've mentioned. Capitalizing costs is a massive thing for the ASX. So it's just a bit of a mess at the moment, and certainly, one we've steered clear of. Although, look, I'm a bit surprised by, I guess, the magnitude of the fall today, because everyone knew ASX had a downgrade coming up. It was probably the worst kept secret, but the extent of the forward expense guidance was even above what the bearish analysts had. So, it was pretty remarkable to see that they've downgraded by such an extent.
Is that a reflection of just investor frustration, both at the big end of town, the big fund managers and retail investors, the ASX saying, for God's sake, just get it right?
Yeah, absolutely. And anyone who deals with the ASX directly, particularly in, pricing for data and whatnot, like they're just not very good people to deal with. I mean, a lot of the large data providers, to be fair, aren't. We deal with our fair share and find it very, very frustrating. But like you've mentioned, they keep putting up prices to customers. Customers are upset. They've burnt a lot of people on the trading platform as well, and traders now are steering clear of the ASX for the RBA cash rate, the interest rate trading, because of what happened with the RBA a few years ago, so firm on not putting up rates, and then of course leading to the largest trajectory of rate rises in decades. So there's just a lot of things going against ASX right now. It's not just management, it's people steering away from their platform on everything really aside other than ASX stock trading. So you look at the settlements of fixed income, like I've mentioned, that's been a big drawback as well.
Yeah. Francesca, what do you reckon of the announcement today, and any interest in the ASX and investing?
Well, what I find surprising is the market found it surprising.
Yeah.
Because, I mean, they failed with that blockchain investment that, I don't know how long ago that was.
Yeah,
it was
that
12,
was
18 months ago.
Yeah.
So, a lot of those costs will be flowing through now still.
Right.
And when you have these capital costs and you get nothing from it, the market's going to punish you pretty harshly. So not all that surprised by what's going on. I'm more surprised by the way the market regathered on the ASX after that failed investment in blockchain. So It'll be interesting to see where they go with that technology. They've announced that they want to move to T+1 and a number of other things as well. But they're very slow at their evolution, and B, their success rate's not that great either. There's not just blockchain. There's other things in the past. So look, I'm not a fan. We have an underweight on it. At some point though, it's going to look good value, but as Daniel mentioned, it's on a fairly steep valuation at the moment, even at this price.
Isn't it funny that after all the stuff ups, it's at its historic valuation?
Yeah, I think
so it hasn't been punished below the historic valuation at all.
I think a lot of that has to do with it being a virtual monopoly. Yes, there's Chi-X in the marketplace now, but really they're still they're small compared to what the ASX is. So I think the market probably places a little bit of extra value on it because of that. But is it warranted? If they, I think it is warranted if they manage it better, but they're not managing it very well at the moment. So
and you've got the regulator breathing down their neck saying, if you can't get this platform right, well then we have to think about whether you stay a monopoly.
Yes.
For the
100%, 100%.
For the financial markets.
But upgrading their trading and settlement process. I mean, our CHESS system's pretty advanced compared to some in the world.
Right.
And really, do they want to be leaders as a market that really is only small in relative to a lot of other markets around the world? So do we need to be a leader in that technology settlement process? I don't think
reliability, we need to be a leader.
100% reliability, not innovation. Look, would I sell it? Look, if I'm being a long-term holder, I'm probably still sitting on profits, and really they're getting punished today. And look, there might be some more weakness in it. If I was looking to invest, I'd probably still wait. I think there's more dust to settle.
So hold if you're in it, but
otherwise avoid. Yes.
Okay. All right. That's our stock of the day, ASX.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads. All on an award-winning platform. IG, where traders are made.